And this is with no money down. Now, if someone like myself, let's say if I'm getting started in the market, what type of credit do I need to get something like this completed?
Perfect question. Minimum score is 620. It's that simple.
620 credit score. That's all you need, 620 credit score in order to do a renovation loan. Now, do I need, what type of qualifying process do you go through? Do I need, can I do a stated loan, or is it like, W-2s? What's the process that's involved in this?
Well, that's the great part about it. It is conventional financing, just like you would at any sort of mortgage. There is no stated product. It's a natural underwriting for income and assets. And so the process would be the same as if you were buying a home. So it's beautiful in that factor.
Wow.
Anybody who is in love is an idiot. I know the fall, don't fall in love, bad guy, don't fall in love. I know the fall, don't fall in love, oh no. I know the fall, don't fall in love.
Hello and welcome to Old Mortgage Minutes with Kingsley Ogudere. Today we have a very special show for you. We're going to be covering renovations. So you may think to yourself, how can I buy that property? It needs a little bit of work, or if you need a specialized loan, or just how can I be a savvy investor? Today we're going to cover all of that for you. I have an expert, a mortgage expert with us today. His name is Matt Keister, and so he's going to give us a lot of information. So welcome Matt Keister to the show, please.
Thank you for having me, Kingsley. It's good to see you.
Our pleasure is mine. Matt, I mentioned that you are a senior loan officer.
We specialize in home purchase, all aspects of home purchase.
So today we are covering renovations. So, Mr. Keister, please tell us a little bit more about renovations. What is it? How do you get started in this process?
Yeah, so renovation is a unique product, and it's really important at this current time in the market. It will, the financing for it comes from the bank, and it's one loan that provides the financing for the renovation and the purchase of the home. And so you can update a home to almost anything that you would like to have in a home, and so that it has clean lines, move-in ready, and you originally purchased it as a fixer. So not only can you purchase a home for a lower dollar amount, pour actual money into it right after the transaction, create basically a brand new home, and you will have circumvented the competitive market that we're undergoing right now.
Wow. It sounds very interesting. How much money do you generally need to get something like this going?
Right. So this is the best part about it. We've all heard of 100% financing, correct? So this will actually provide you the financing for the purchase and the renovation. You don't need any money. In fact, the renovation mortgage will create money that at the end of the day will be equity in your home. It's very amazing. All you need is earnest money deposit, which is maybe a couple $1,000s, and the closing costs, which would be typical of any financing for a residential home. So it's almost like a secret. It is no money down, and it creates equity, and you get a brand new home. So I don't think we can beat that.
Wow, no money down. That's really, really interesting. When I do a lot of shows and cover a lot of information, and quite often, people ask me about process of no money down type of loans. So here, someone is telling you in regards to being able to get a property, an investment property at that, correct?
Right. All phases: primary residence, second home, or an investment property.
Wow. And this is with no money down. Now, if someone like myself, let's say if I'm getting started in the market, what type of credit do I need to get something like this completed?
Perfect question. Minimum score is 620. It's that simple.
620 credit score. That's all you need, 620 credit score in order to do a renovation loan. Now, do I need, what type of qualifying process do you go through? Do I need, can I do a stated loan, or is it like, W-2s? What's the process that's involved in this?
Well, that's the great part about it. It is conventional financing, just like you would at any sort of mortgage. There is no stated product. It's a natural underwriting for income and assets, and so the process would be the same as if you were buying a home. So it's beautiful in that factor.
Wow.
Yeah.
Okay. Now, how long have you been doing this, loan officer?
For 15 years. Started down in LA and have been in the Sacramento area for the past 10 years. So I studied real estate finance in college many years ago, and just carried that passion on through into real estate finance.
Well, what made you get into mortgages?
Well, it's pretty amazing to be involved in something that's technical, but you're also helping out somebody significantly. It's their biggest purchase, right? And it's complicated. It's complicated for us loan officers sometimes when we have to look up these guidelines. But as professionals, holding the hand of an individual, a family, anyone that wants to buy a home where they're going to raise their children and so forth, you're the one doing it. It's a special kind of pleasure.
Yeah, I find that being in this industry, being able to assist people, the joy, the experience that a family has when they're finally approved and you give them the keys to the home, the joy and the gratitude that most people have is immense. So that's one of the great aspects of being in this industry. I always encourage people, contact a mortgage professional. Try not to do a lot of these things yourself. I know there's a lot of self-help situations. This is usually the biggest expense that most people will make, or biggest purchase that most people will make in their lifetime. You should entrust it to a mortgage professional so you can get expert advice. If there's any hiccups, any obstacles that come along the way, that you have a trained professional that's able to handle that for you appropriately so you don't risk any of your hard-earned finances.
You know what, can I touch on that, Kingsley? It'd be
absolutely
super helpful for people to understand. A lot of credit consultations have gotten people to run their credit or monitor their credit, and they constantly understand their score, but that score is not an actual mortgage score. And so they think that they have a certain score that's going to get them approved, but they really need a mortgage loan officer because the mortgage credit report is different, has a different algorithm for pulling information and risk. So that's key. And also, when you run your credit, I think most people fear running their credit multiple times. When you're doing it in a short period of time, a couple of credit pulls within a mortgage space is absolutely permissible. It won't damage your score at all. And so I highly recommend that you contact a professional because they will guide you right to the doorstep.
And I'm glad you kind of mentioned, the credit score. A lot of times, a lot of customers, are hesitant, in terms of having their credit reviewed. It's like if you go to a doctor, you will not ask a doctor, just give me, prescribe some pills for me without actually doing an examination. That's a dangerous way of approaching any situation. So you want someone to fully assess your situation, take the time and see what you truly qualify for so they can give you a proper treatment. So without the proper examination, quite honestly, it's kind of taking a stab in the dark. You don't know what you're doing. So it's always great that you must have your credit reviewed. And like, Mr. Keister touched on, having your credit reviewed in that short time process is not something that's going to affect you. It's expected that you do have it reviewed. And if it's by multiple people, as long as it's in that, time frame, you're still protected and it's not going to drop your score. However, if you go to an auto mall where you have 20 different lenders reviewing your credit, that will make an impact. So just want to kind of make that clear. Okay. Now let's ask a little bit more about this renovation process. Can you explain to us in detail some of this process, please?
Yes. Get out your pen and paper. What you need to do, like we talked about, contact a loan officer for one, and then we will approve you for the mortgage. Have a good real estate agent that knows the market well. It's super important to have a good real estate agent. They're going to find those fixers, those properties that you don't know about that will be a good subject for a renovation mortgage, okay? The other thing is that you need a good contractor. I think the real estate agents will have contractors, but it doesn't hurt that you have your own contractor that you have knowledge of or trust. You're going to need an actual GC with licensed bona fides that will be able to be approved through the bank. So that is really your first step in doing this. And then hunt for those homes. You know, you're going to, especially in a competitive and an elevated market where homes are being priced at the peak, there are plenty of houses out there that are in disrepair that everyone is overlooking. So you want to be able to find those properties, make a strong offer, and from there, your real estate agent will get you into contract. The thing is, the seller and the selling party does not need to know that it's a renovation mortgage. They may think that it's too risky, or they don't want to be involved in something like that. They will never know because it's in the background that your renovation mortgage is being processed. And once the purchase transaction is closed, the seller moves on, they get their proceeds, and that's when the renovation starts. So to take a step back, you've got let's say you find a house and you get into contract. You will immediately need to get the contractor in there to produce a bid. Okay, it can't be an estimate, it's got to be an actual bid. 2 contractors with 2 bids, very fair thing to do, very wise. But the timeliness of it is really what's important. You need to get them in the next day, or actually I should say during the transaction. Have your real estate agent have, let's say, a home inspector go in there, which would be your GC, your contractor, evaluate the property and run their measurements and produce the bid. The bid has to be approved by the bank, and then we're ready to go. The close of the transaction will happen. They do a calculation of how much money, how much improvements will need to be done, see if it meets within a certain threshold, because you can't spend $500,000 on a $100,000 house. So it needs to be within reason and under the high balance conforming loan limits. We can talk about that in a minute. But in the middle space of homes, you will be able to start the renovation and after the transaction closes where the seller has already moved on, and you can take a month or up to 12 months to renovate this home. And once it's done, you have a home that has completely clean lines and the touches that you want, especially the woman's touches, because when you go into these properties, they basically get to dream about what they need, right? So all the touches will be there, and here's the key part, that because you are improving the property, it improves the bank's position, the collateral, they love it, you get a new home, and the property value is going to be worth more than the loan amount. So that difference between the value and the loan is free equity. That is your down payment. You'll likely create 20% equity or more, and that is your down payment. No mortgage insurance. So I can't think of a better type of mortgage than the renovation mortgage for a first-time home buyer or anybody that finds this market a little too competitive.
It's a more savvy way of being able to get to the same process. I've done a lot of specials on first-time home buyer programs and down payment assistance. So this is another creative way of being able to get that same result in terms of being able to get into the home. You mentioned some high balance limits.
Right.
So what are the general ideas or limitations that a bank will impose on this type of loan?
Right. We call them conforming loan limits and high balance. So depending on the county that you're in, Sacramento County has a high balance 517. The normal was raised from 417 to 473, 100, I believe. So as long as your loan amount stays under that limit, which is highly likely given the market that we're in, you will be able to be approved for the loan. In other words, we're not lending out $1 million for a property. You just have to stay within the high balance limits of your county, and you can actually Google that information, high balance loan limits in my county, and the number will pop up. So generally speaking, it's 473 and 517 respectively. Down in the Bay Area, 625.5. So those are Fannie Mae and Freddie Mac guidelines. That these are the loans that are approving, that are being underwritten through Fannie Mae and
That's
Freddie Mac.
a lot of great information. So we've learned a little bit about the loan limits. If nothing else, for your county, you can look that up and find out exactly what the loan limits is for your county. Now, Mr. Keister also mentioned 620 credit score
Right.
Is what is needed. down payment essentially is not needed for this process, because of the creative and savvy way of being able to go into this property. Now, are there any type of limits in terms of what you mentioned they will give you one loan in general. If I'm looking at a property, as you mentioned, they won't lend $1 million on a $500,000 property. What are the general guidelines? Are they looking at, they will give you $100,000 to be able to, fix up the property? What the difference will be when, I imagine that will be at the end, what the property is appraised for once it's fixed up, right?
Right. Absolutely.
How would that work?
Absolutely good point. It's imperative. That's why you work with a general contractor that can produce that bid fairly quickly, because that needs to be analyzed. How much work is going to be done? Let's say it's $150,000 worth of work, and you're buying a property fixer for $350,000. Then the total amount will be $500,000, and you would need to make sure that is under the county limit for Fannie Mae. But more to your point, you need to be able to analyze what improvements that you are doing. The bank, the contractor, and loan officer will work on making sure that it fits within those guidelines. You can't put a helicopter pad on your house because you want one. It has to be normal upgrades and improvements to the home. And I think that's why I really want to make sure that first-time home buyers and younger individuals understand this product, because it's really geared towards you. Others that are older, that have money, they're just going to buy a home with 20% down and so forth, and it doesn't really matter the purchase price. But for a competitive advantage in this market, this is the loan that you're going to really want to investigate, because it touches on all the aspects of getting a home in this competitive market.
In today's market is definitely a very, very tough market. You have to think outside of the box, especially homes in the Bay Area, for instance. All the homes, if you don't have a contract in a 15-day contract, it's probably not going to happen. So you have to think outside the box in terms of being able to get the property that you want, being able to actually do the work and get that property, to the specs that it needs to be to make it your home. So we're getting good information from Mr. Matt Keister from the mortgage company.
Yeah,
Please.
so I think it's really important to understand, in a competitive market, you're constantly being outbid, or you're just not the first person on site. So when you're dealing with a fixer, nobody's looking at those. So you have a more of a competitive advantage to offer less. You're not competing against other buyers. So you have more time. Like you were saying, 15-day escrows are sort of the norm in really hot markets. No one's going to impose that on you on a fixer. So you basically have the field to yourself, and you can pick and choose. You don't need to be rushed. Just get in there and find a home that has a decent floor plan, or enough a lot size, if you will, because you can always add on a room. You can improve the landscaping, brand new kitchen flooring, roofs, even solar.
This is why you should contact a mortgage professional, because there's a lot of detailed information, a lot of creative ways that an expert can truly be able to assist you, guide you through the process, make sure that you are truly prepared so you can have a seamless process in getting this done. It's always overwhelming to think of a product that you don't know much about, but we deal with this on a daily basis. I can assure that Mr. Keister, obviously from the knowledge pool that what he's exhibited here, he knows what he's talking about. So this is a good person to contact if you have questions. And we will put up his information as well for anyone that wants more information on renovation loans. Please do contact a mortgage professional so they can be able to guide you through the process, let you know what you qualify for. Make sure that you go through a seamless process and a fast and effective way. Mr. Keister, any more items that you want to add onto this matter?
No, I would say that take it easy, don't get stressed out, and put all the burden on the professionals. Just tell them what you want, and we will guide you to the right spot.
Mortgage Minutes. Today we are chatting with Mr. Matt Keister from the mortgage company, and we're discussing renovation loans. So we're giving you a lot of detailed information on how to get renovation loans, how effective they are, what kind of timeline they generally present several years. You've been in this mortgage industry, we said 15 years, I believe?
15 years, that's right.
Yes. And tell me, what is the most interesting thing that you've seen in those 15 years?
Do you have another hour?
Yeah.
Oh my God. In the mortgage business, you really do get into detail of people's personal lives. And I think that in addition to providing the financing, you're also a bit of a therapist in getting them through some difficult aspects of whether it be financial, trying to get the financing for what you need, or just some other type of lifestyle things that you're trying to get them to the next step. So the challenges are constant. There's no single file that is similar. So really, those types of challenges, constantly being out in the community and making sure that people know that you're available, while also working hard at your desk, trying to make sure that their loans are processed in a timely manner. It's just a constant fight to get as many things done as possible.
How do you balance that with the work life, with work and with the kids?
Yeah, I think, good question. I think that because the mortgage business is a bit stressful, the real estate business is a bit stressful, I've now taken to going to the gym in the middle of the day. I didn't used to do that, but I got to find a way to relieve some stress, and I think that doing some exercise really helps. Waking up early and going to bed early has actually been a huge improvement on my life. I used to stay up till midnight trying to make sure my files were done, and if there's any last little bit that I can do for a real estate agent, that type of thing. But I realized that I got to put a hard stop to it and really focus on my health. And from that, I'm gaining more energy. I'm able to do more things.
Definitely having a work-life balance is important. I would encourage everyone. This is a very active business. Especially when you're determined and dedicated to helping customers. Sometimes you'll find yourself in the middle of the night, thinking about, customer files that you want to help. And, like I said, when you care about your customers, sometimes you go that extra mile, but you have to balance out. Your health is the most primary thing that we all should be concerned about. Now, kind of getting back to renovation, loans. Before we wrap up the show, there's been a lot of information that's been shared. So I kind of want to, touch back and recap some of the items that we discussed. We mentioned, 620 credit score. So these are some of the key items that I think that everyone should have an idea, or at least keep in mind. 620 credit score, is what you generally need. The better the score, the better options that are generally will be presented, like any kind of like any other type of loans. In terms of documentations, what you will need: 30 days of pay stub generally, W-2s for the last 2 years.
W-2 for the last 2 years. If you're self-employed, you're going to want your tax returns completed and filed. And download your bank statements. Download everything at an electronic document like a PDF. Have knowledge of where to gain this information, and take the step, if you don't have your old W-2 or what have you, to download that from your employer. Okay, we need residence history for the past 2 years. So these are the types of things that are traditional in any mortgage application. So just be prepared for any documentation. I would say large deposits is another thing. If you have something over $1,000, underwriters are going to they have to have this documentation of the deposit. So I would say that be prepared to get the documentation necessary for the mortgage broker if they are asking you what it is, and I wouldn't provide any resistance.
And for the tax returns, is it generally 2 years tax returns as well?
2 years, all schedules. So your full tax return. We don't need your state tax returns, just your federal tax returns, all pages.
Okay. So you heard it here, generally, the items that underwriters will need from you is essential. So be prepared. That's why I would encourage you contact a mortgage professional so they can assess your situation, be able to tell you the ins and outs in terms of what you would need, be able to guide you through the process. Renovation loans, don't be afraid of them, embrace them, because in this market, you must be able to adapt and be more savvy than your competitors. So we will, continue with more information for you. This is Kingsley Ogudere. I want to thank you for joining us for today's episode of Old Mortgage Minutes. I want to thank Mr. Matt Keister of the Mortgage Company, for joining us today and giving us a lot of helpful information. We thank you for being, a gracious, guest on our show.
Thank you for having me. Pleasure's all mine.
All right, and I want to thank you out there that's watching the show. Please continue to tune in to Old Mortgage Minutes, where we give excellent information pertaining to mortgages and any type of business needs. And if you want to be a guest on the show, please send your information, to oldmortgageminutes@gmail.com or contact at the phone number 916-821-9178. Thank you again, and have a great day.